Welcome, and thank you for watching this second episode of Microsoft's Top Trends in Financial Services video series. Our goal with these conversations is to shed light on trends shaping the future of financial services. My name is Amy Young, and I'm an industry digital strategist in Microsoft's global financial services industry team. I'm thrilled to welcome Theodora Lau to share her thoughts with us on this important topic. First, a bit about Theo. Theo is a book author, public speaker, and advisor. She is the founder of Unconventional Ventures, awesome name, as well as a co-author of Beyond Good, How Technology is Leading a Purpose-Driven Business Revolution. She also co-hosts the One Vision FinTech podcast. Through her work, she seeks to spark innovation to improve consumers' financial security. So let's start by understanding the problem a bit better. Theo, I'm curious, where do you think consumers typically make the most suboptimal decisions when it comes to their finances?
First of all, thank you so much for having me join you in the Top Trends in Financial Services series. It's the question you raised is a very, very important one, and we're definitely living in very interesting times, interesting quote unquote. As you mentioned, inflation is at record high, and household debt is also increasingly, and I would say in a uncomfortable trend, if you will, high mortgage rates, credit card balances, and what have you. All of that adds to the stress that consumers are facing. So one of the data points, I'll use that to tease out the conversation. About 55% of Americans say that they are behind on saving for retirement. And particularly those between 25 and 34 years old, their median 401k balance is just over $14,000. It's hard to think about retirement when you're struggling to make ends meet. And so we end up seeing people stop saving, or they stop putting money in retirement altogether. I think there's more that we can do to help consumers from the perspective of understanding what is the impact of their actions, and perhaps, giving them the tools and the data that they need to make better choices.
So I love your point about data, and that's a great segue to my next question, because no one makes good decisions without good data. Because of that, making accurate financial data more accessible to consumers and the financial professionals who help them is a core priority at Microsoft. Whether it's making teams compliant with industry regulations or enabling institutions to better understand their customers, we are heavily invested in tailoring our software to financial use cases and making it easier for institutions to provide the tools their customers demand. But it all starts with great data. So I'm curious, Theo, what data do you think financial institutions could be leveraging better to help consumers make their best possible financial decisions?
That is one of my favorite areas, Amy, talking about data, because like you said, data is the foundation of everything that we do. So I think banks, financial institutions have a lot of data. What we will need to do more of is create more actionable, holistic data to provide that to consumers to act upon. I recently came across a startup that is developing algorithms that use big data generated by banking activity and the property market to create a way for banks to help mortgage customers understand better their financial situation, and also to help them to not switch by providing them with better products. So I believe this particular solution, they're looking at 20,000 attributes for a particular customer, and they use the information that they have with the bank, the transaction records. They take into account macroeconomic data. What are the competitors, right, in the space? What is the pricing, the housing market, and all of that? And they predict and rank the customers who are most likely to churn because of hardship, because of better products and services out there. And then they provide that insight to the lender so that they can use that to determine the next course of action that will be helpful to customers. So this is where I am very, very hopeful in, our industry being able to use technology and data for good?
From Microsoft's perspective, I mean, we hear from our customers all the time that one of the great benefits of cloud computing is how it facilitates the secure exchange of data. What you're describing with this mortgage solution involves, data flowing between different parties and different, so that analysis can be done on it. One of the best ways we can help consumers implement those decisions is by making those experiences frictionless. And this concept is at the core of embedded finance. It's all about forging partnerships to put financial tools and products into other consumer journeys where they can be useful, at the time. So I'm curious what kinds of embedded finance partnerships you think hold the most potential to help consumers make and implement better decisions.
My favorite examples when it comes to financial inclusion and embedded finance is around how we can use the tool and the data to empower the underrepresented demographics. So one of my favorite ones always centers around developing economies and micro and small medium enterprises, because they are the backbone of our global economy. For example, how do we help smallhold farmers around the world get access to credit so they can, expand and perhaps counter the negative impacts of climate change, right? I love examples in, for example, Africa, where they are using AI and IoT to detect when there is a drought situation. They can actually automatically send replenishment seeds for the farmers to replant instead of having to wait yet another year for them to replant the seeds, because therein you would have lost the entire year of growth as well as income, which is crucial to many of the farmers in developing nations, especially at the backdrop of climate change.
And that's actually a great segue to the last topic that I'd love to chat about. And this is something that is fundamental, has always been fundamental to financial services, but as you say, now even more so, and that's trust. At Microsoft, we believe that data and transparency on how that data is used are key to building trust in this new model. This means being clear about what data you're capturing, how you're using it, of course, having proper consent for everything you do, and finally, absolutely, always keeping the data secure. So we embed capabilities like this in our cloud platforms to help our customers use data fairly. I'm curious what examples you might have of how financial institutions could use data in this new paradigm to help cultivate trust in a new way.
I like that question, and that's something that we think about a lot, don't we? I grew up being able to see banks, down the street from me, and you resonate with things you see, with things you experience. The good news is, though, 8 in 10 consumers still trust their banks. So that's a great starting point. But what about people who don't have access to financial services, right? And this is where it goes back to your point. Technology plays a huge role. Data plays a huge role because we have a lot of data. So one of my favorite examples of late is something called Project Reach. And it's something that seeks to expand credit access in underserved communities in the United States and lower the barriers to financial services. Is actually a collaboration of sorts between a couple of major US banks. And what they do is, one of the pilot programs they have is issue credit cards to people that don't have credit scores. And they do that by using information around a person's income. And other aspects of that program that I love is how they're using technology to help small business owners, a lot of them women, veterans, or those from underrepresented communities, to get credit by adapting the underwriting standards that they have with the banks, and perhaps use a different credit score threshold to bring them in and help them gain access to financial services, be it, getting access to credit to build their business, to expand it, or just, simply building a lot of things that unfortunately we take for granted. And the beautiful thing about financial inclusion is that with all of these different thinkings, and hopefully we can then show customers, hey, you can trust us because we're using the data, not just in some ways people think are exploiting people who are from disadvantaged communities, but actually helping them, lifting them out of poverty and helping them break the cycle. And so those are amazing stories that I would love to see more.
There's clearly a ton of data out there that all of us generate in our daily lives that can be used to create a more accurate credit score, if you will, to reimagine what credit scores could look like, that has the potential to, be more inclusive for a lot of people. But there's also a lot of risk with that, because we have to constantly be vigilant about incorporating new biases, unintentionally. And Microsoft has a lot of thought leadership under our AI for Good practice to guide companies on how to make sure they don't unintentionally, incorporate new bias into their models. So I could go on and on, but we're at time. So thank you so much for your insights today, Theo. And thank you to our audience for joining us. I hope you'll watch the rest of the Top Trends in Financial Services video series, which features other industry experts like Theo discussing the latest trends they're seeing at the intersection of technology and financial services. Stay tuned for the next episode, and we hope to see you again soon.